Welcome back to Maryland Today. Joining me today, and always a pleasure to have her here in the studio, Deanna Booker. She's a consumer finance expert and a spokesperson for Consumer Credit Counseling Services of Maryland and Delaware. Deanna, thank you for being here.
It is my pleasure, always.
Today we're talking a little bit about foreclosure prevention. So we all hear the real estate market finally starting to rebound. We're starting to see home sales are picking up a little bit here. But I understand that a recent Realty Track foreclosure prevention report shows that Maryland homeowners still face an uphill battle in this. Can you tell us a little bit more about Realty Track's findings?
Sure. According to Realty Track, just last month, just May of this year, they came out with their foreclosure report. And in the report, it was noted that Maryland posted the nation's fourth highest foreclosure rate for that month. So foreclosure activity in Maryland is up, actually. It actually increased 11% from the previous month.
Wow.
And it was up a staggering 134% from a year ago. Across our state, 1 in every 587 housing units had a foreclosure filing. So we're still in the thick of it. Even though, like you said, there's some rebound, we're still in it.
Kind of interesting that it would go back up after seemingly going down for a period of years,
Exactly.
too. That is. Well, it sounds like foreclosure is still definitely a problem for many people out there. What types of options are available for Marylanders who are struggling to pay their mortgages?
You know, it really does just depend on each homeowner's situation. No two foreclosure prevention cases are going to be exactly alike. A lot of times people think that, oh, my friend or my neighbor, they got a reduced interest rate or they got a loan modification, so I want the same thing they got. But it really doesn't work like that because, again, the options that are available really do depend entirely on what a person's going through and what their situation is. So the options that are out there, they're based on circumstance. For example, there might be consumers who aren't too far behind on their mortgages and who have enough income. They might qualify for a modified loan repayment or a loan modification program. Now, there are other consumers maybe who lack the financial resources to qualify for those programs, so they might have to consider options that involve leaving their home. So again, it really does just depend on what a particular homeowner is going through.
So, Deanna, how can homeowners who are worried they may fall behind on their mortgage ensure they're still going to have access to the best options?
Well, I think the key is getting help as early as possible. That really is the only way to preserve the options that you're going to have. So if you think you're going to be late or you're going to miss a mortgage payment, you want to call your mortgage provider today, not tomorrow or not next week, but right away. You want to talk with them, explain your situation, and ask them about the options that they might have available. If you're already late, you want to make sure that you're opening the correspondence that your lender is sending to you. Early on, the communications that they send, they might include information about foreclosure prevention or options that might be able to help you. But if you're not opening that mail and it gets later in the process, the letters that they're going to be sending then are going to be a bit more forceful and they're going to include some legal notices and that kind of thing, stuff that you really can't avoid. So the other thing I want to point out is that folks really want to seek immediate help from a reputable nonprofit HUD-approved counseling agency like Consumer Credit Counseling of Maryland and Delaware. You want to get that professional help and you want to get it early.
So how does CCCS help people out in this situation?
Well, during our counseling sessions, we're going to help homeowners make a financial sort of reality check. And it's important because a lot of times homeowners are so emotionally overwhelmed, when they're in this process. They aren't really looking at the big picture all of the time. They might be thinking, this is my home, this is where I live, this is where I've raised my family. But meanwhile, they're struggling just to make the mortgage payments every month. So we really try to encourage them to step back, to look beyond the here and now, figure out what's going on, and also look to where their finances are going to be maybe in a year or two down the road. So we're going to help homeowners explore all the options that might be out there, might be available to them, and determine if it really is in their best interest to keep their homes. Now, there are some situations where options are limited. So we're also, in those situations, we're going to be working with homeowners, helping them come to term with the difficult situations and, just so they can make informed decisions, even if they're hard.
We've talked about this before when I've had you in here. I've had some financial issues in the past in my life. I really do try to stay on top of things now, so I don't really fall behind. And when I do start to fall behind on a thing here and there, I do panic a little bit. It does kind of freak me out because I don't want to go back to that situation. Falling behind on a mortgage. I don't have a house. I can't imagine falling behind on my home.
Exactly.
Falling behind on a mortgage, the threat of that foreclosure, just such a scary prospect. It's easy to see why many homeowners in this situation, they might be tempted just to walk away from their home still because it can be a dangerous thing here. Why is this unwise?
it really is unwise on a lot of levels. If you simply mail your keys in, lenders have a term for it. They call it jingle mail, where folks are just mailing their keys back and walking away. If you simply just mail your keys in and leave your home to the lender without seeking their approval prior, they're going to most likely go forward with the foreclosure and the resale. And once this takes place, a lot of times folks can be in even greater financial trouble. You might be liable for the additional taxes or payments of a shortfall if the bank gets less from the resale than what you currently owe on it. So it's just not a good idea. It's not a good idea, and it can leave folks in more trouble than they were in.
So what alternatives are available to homeowners who want to avoid foreclosure but who can't afford to keep their homes?
Right. That's a great question. Short sale and deed in lieu of foreclosure are the two options that might help financially distraught homeowners avoid the foreclosure process. Neither of these options generally has as serious, and notice I said as serious, of a financial effect as foreclosure. But both of those options may also provide consumers with relocation assistance, which is something that foreclosure never does. So a lot of times it's a good idea for folks to look into those two.
We're going to talk a little bit more about short sale and deed in lieu of foreclosure strategies in a second. But first, why is relocation assistance important?
Well, that funding is important because it helps cover the cost of moving from your home. Again, if that's what folks are going to be faced with, that's an additional expense. This type of assistance makes it easier to kind of deal with that transition and move from the home that you've been in to more affordable housing. The amount of relocation assistance homeowners can receive really might vary. It really does depend on their financial situation and what their lender is willing to approve them for.
Okay, let's talk a little bit about these options, short sale and deed in lieu of foreclosure. Let's start with short sale. Can you please describe how that process works?
A short sale is generally the best option if you can't afford to stay in your home. Under this option, your lender agrees to accept less than you currently owe on your mortgage, and they allow you to resell the property, resell your home yourself.
Okay. And why are lenders willing to participate in short sales?
Well, as part of the short sale, the homeowner is responsible for finding a realtor and placing the home on the market. So this is saving the bank the time and the costs that are associated with foreclosure and maintenance and them having to be responsible for selling the home. Lenders also generally make anywhere between 17 to 25 or so % more on a short sale than they might if the property went through foreclosure. So that's why they're willing to do it sometimes.
So how does a short sale benefit the homeowner then?
Well, a short sale is generally going to have a smaller effect on your credit rating, on the homeowner's credit rating, than a foreclosure will. It also might make it easier to qualify for a mortgage in the future. Again, depending on the situation, a homeowner might be able to obtain a mortgage again in a year or two. A few FHA programs allow people to buy a home even sooner than that. So it's just a little less of a hit, for lack of a better word.
If somebody listening right now is going through some of these issues in their life and they might be thinking about this as a possible option for themselves, what qualifications do homeowners have to meet to be approved for a short sale?
Well, there are really two major ones. Your home must be worth less than the amount that you owe on it, and you must also be able to show that you've experienced a financial hardship, such as a job loss or reduced wages, divorce, serious illness, something like that. You've got to be able to prove that hardship to the lender. Those are the biggest qualifications.
How do homeowners prove that they've gone through that financial hardship?
You know, it's really like providing evidence at a trial. You really do have to offer a lot of facts and evidence. It really is kind of like litigation. It isn't just enough to say, I lost my job or I got divorced. You really actually have to provide a copy of your employment records and divorce decrees and that kind of thing. So there's a lot of fact-finding, time and effort that has to go into it.
Well, due to the amount of time that we have for this interview, we are really just kind of scratching the surface here, giving you the most basic information about this entire process. But are there any other, highlights maybe that homeowners need to know about short sales?
Well, I'd just say that it pays to learn as much as you can ahead of time. You want to make sure you understand how your lender is going to handle things if the price you receive is less than what you owe on the home. Even though short sales generally don't take as long as foreclosures, they can still be time-consuming and require a lot of documentation like we were just talking about. You're more likely to save time. You're more likely to have some success around the process if you work with a realty professional with extensive short sale experience, somebody who's familiar with all the current programs that are out there, that understands all the bank's processes. This helps ensure that you're going to get all the information together that you need. It's going to be submitted properly so your lender won't deny it. So I think it really is just about understanding the process.
Okay, we've given a nice little outline of what a short sale entails. You've also mentioned before the deed in lieu of foreclosure option. How does that work?
Deed in lieu is a little less common. It's a little less common foreclosure prevention alternative. And like a short sale, it generally does have a less of a lasting impact on your credit history than a foreclosure would. Under a deed in lieu, you agree to voluntarily deed the home back to the lender. And this satisfies the default, on the mortgage. These are relatively rare because lenders aren't always willing to approve this route. In some cases, though, the lender might agree. After weighing the time and the cost involved in seeking a foreclosure, they might agree to have you or to allow a homeowner to go through this. But before your lender grants a deed in lieu, they might require you to pay for an appraisal, a title search, just to make sure that there are no additional liens on your property and that kind of thing. So again, still a process, but one that a lender might be willing to undertake with you.
Well, Deanna Booker, as always, we've covered a lot of really big and important information today. Yeah. Before I do kick you out of here, what final advice do you have for financially stressed homeowners who may be listening right now and might be thinking, I need to learn more about these options?
Right. The key thing, I can't stress it enough, is to get help now. Do not wait. Don't wait. Don't wait until you're further behind on your mortgage if you're behind now. Immediately contact your lender, see what options they can provide you with. And it really does pay, like we mentioned before, to get some HUD-approved housing counseling from a reputable nonprofit agency.
I seem to know one.
Oh, you know what?
I've heard of this before.
I think I could mention one too.
Why don't you do that?
Consumer Credit Counseling Service of Maryland and Delaware. We have free confidential foreclosure prevention counseling. Our counselors are trained. They're there to help you assess your financial situation, examine the options that are available. So I can't stress enough. Again, folks can just call our housing line. It's 1-866-731-8486 to set up an appointment, or they can visit our website, cccs-inc.org. The sooner that you seek some help, the better the chance that you're going to find an alternative that's going to work for you.
Again, that number is 1-866-731-8486. The website, cccs-inc.org. Deanna Booker, consumer finance expert and the spokesperson for Consumer Credit Counseling Services of Maryland and Delaware. Fantastic job once again. Always giving us plenty of great information. Really appreciate you coming by.
It's my pleasure. Thanks for having me.
And thank you for joining us this and every week for Maryland Today.